All right, let's talk about Eli Lilly. They just dropped an earnings report for Q4 2025 that was, well, it wasn't just a beat, it was a complete reset of what everyone thought was possible. And boom, the market reacted instantly, a 10% jump in a single day. I mean, you just don't see that happen to a company this size without something huge going on, and we're going to dig into exactly what that something was. So that's the big question, right? How in the world do you add over $100 billion in market cap in just one trading session? It's incredible. So in this explainer, we're going to unpack exactly that. The numbers, what they're telling the street for the future, and the whole strategy that just sent investors scrambling. Okay, let's dive in. Okay, here's the game plan. We'll start with the headline numbers, then peek inside their growth engine. After that, we'll look at the guidance and the market's reaction, and we'll wrap it up with our take, the next call.
All right, first up, the headline beat. And really, calling it a beat kind of undersells it. This was a statement.
So just look at these numbers. Lilly didn't just sneak past expectations, they completely blew them out of the water. We're talking revenue of over $19 billion, when the consensus was under $18 billion. And it's the same story on the bottom line. Adjusted earnings per share came in at $7.54. Wall Street was only hoping for $6.91. That's not a beat, that's a blowout. That revenue beat alone was over $1.3 billion. Just let that sink in. So where did it come from? Well, it's all about the massive, overwhelming demand for their incretin drugs. You know them, Mounjaro and Zepbound. They are absolute powerhouses right now.
And all that extra revenue, it flowed right down to the bottom line. They beat earnings by 63 cents a share. This is what we call operating leverage in action, and it's beautiful to see. It basically means as those sales are booming, a huge chunk of every extra dollar drops straight into the profit bucket.
So what's really going on under the hood here? What's fueling this incredible growth engine? Well, it really boils down to three key things: demand, manufacturing, and what's coming next in the pipeline. Let's break it down.
Okay, so number one, the demand for their GLP-1 drugs is just off the charts, absolutely insatiable all around the globe. Number two, they are pouring money into a massive manufacturing expansion to even try and keep up. And number three, it's not just about today's hits. They've got a really robust pipeline that's ready to secure growth for years to come. And when we say massive expansion, we mean it. I mean, listen to this quote from the CEO, Dave Ricks. Since 2020, they've put over $55 billion into what he calls the largest manufacturing build-out in company history. That's not just some line for an earnings call. That's management telling you loud and clear that they are all in on solving their biggest problem, which is simply not being able to make this stuff fast enough. Okay, so the Q4 numbers were amazing, for sure. But honestly, that's not even what really set the stock on fire. The real story, the thing that truly blew the doors off, was the guidance for the future. And here's the key takeaway. Management isn't just saying things are good. They're saying things are getting even better and fast. They guided for full-year revenue between $80 and $83 billion, and earnings per share, $33.50 to $35. I mean, both of those ranges were so far above what anyone on Wall Street was expecting, it literally sent every analyst back to the drawing board to completely redo their models. This chart really tells the whole story of the surprise. You see, the options market, that's basically Wall Street's betting window, was predicting a big move, about 5.5%. But the actual stock move, over 10%, almost double. That just goes to show you how much of a shock this incredible one-two punch of results and guidance really was.
Okay, so that brings us to the final part of our breakdown, the next call. This is where we put on our analyst hats and give you our forward-looking take on Lilly based on everything we've just seen.
But first, just a quick bit of housekeeping so we're all on the same page. When we say outperform, what do we mean? Simply put, we expect the stock to do better than the broader market. Think the S&P 500 over the next year. Okay, let's get into it. Step 1, the thesis. We think the whole story around Lilly has changed. It's no longer a question of if they can meet demand. The only question now is how quickly. Execution has gone from being the biggest risk to their biggest strength. So step 2, what's the catalyst? What's going to push the stock higher? For us, it's all about continued good news on that manufacturing build-out. And that leads to step 3, the trade. We think you position for a move toward a $1.5 trillion valuation by the end of 2026. A good way to think about that is using long-dated call options to capture the upside as they keep raising guidance. So, to put a bow on it, what do we expect next quarter? Another beat, plain and simple.
driven by more Zepbound uptake and Mounjaro sales overseas. Now, the price action. Look, after a run like this, it might trade sideways for a bit, consolidate, but we see a steady climb as they keep proving they can execute. So our rating is outperform. And of course, please remember, this is not financial advice.
And we'll leave you with this one last question to think about. When you have a clear shot at dominating a market this huge, we're talking hundreds of billions of dollars. Is your biggest risk really the competition anymore? Or is it just a race against yourself, your own ability to scale fast enough to catch this absolutely historic wave of demand?